Hey, good morning, everyone. My name is Joe Bladdock. I'm a mortgage broker with Verico Mega Mortgage, and today I'm going over trigger rates on variable rate mortgages, the ones that have fixed payments. So let's get started here right away. We're going to look at this article here, and what we have here is an article from CanadianMortgageTrends.com. Great website for some information. And if you took a variable rate mortgage that had a fixed payment, then you might want to take a look at this because uh yeah, some variable rate mortgages do have static monthly payments, and that's what we're talking about here. So these kind of mortgages protect the cash flow from fluctuations in prime rate. Now there are also mortgages that do change with the fluctuation of prime rate. So say if the Bank of Canada does increase the prime rate, then the monthly payment will actually go up to make up the difference for that interest. So we're looking at another Bank of Canada increase this fall, which will be September the 7th, 2022, which just is in about over a week at this point. And let's take a look at what happens when we hit that trigger rate. And these will apply to mortgages that were taken in the early spring of 2020 and early March of 22, when the prime rate was only 2.45%. So looking at this here, the length of amortization plays a big factor in that. So if you've taken a variable rate mortgage with a fixed payment option, when prime rate does go up, essentially your amortization increases instead of your payment increasing. And so if you have a 30-year amortization and the rates go up, your amortization will tend to increase. 31 years, 32 years, 35 years, 40 years, depending on how much the rates go up. And for those who've taken a mortgage with 25-year amortizations, you'll hit the trigger rate a little later. So let's take a look at how this is going to happen. So how can a fixed payment variable rate mortgage increase? Well, take a look at how this works. There's a certain amount of principal that does go into your mortgage and a certain amount of interest that goes to your mortgage. And essentially, what happens is that as the rates go up on a fixed payment variable rate mortgage, the amount of interest goes up and the amount of principal goes down. And the trigger rate would happen when the interest portion would exceed the total monthly payment. So that's what happens when you hit your trigger rate. So take a look at this here. We have a loan amount of $585,000. The date is January 2022. Prime rate is 2.45%. Your rate is 1.45%. Your payment is $2,005. And then the interest portion is $707, and the principal is $1,298. Now, for the same loan amount, later in August, the prime rate is now 4.7, your rate 3.7, payment $2,005 still because it's a fixed payment. Remember, your payment has not gone up with variable rate increases, which some mortgages do, and this would not apply. But essentially, the interest portion has gone up considerably, pushing your amortization further down the road. And then your principal is only $201. Okay, so you're still good. You still haven't hit your trigger. But let's look at when you hit your trigger. Still same loan amount that you've taken out, $585,000. Now it's the fall of 2022, possibly September the 7th or later. Prime rate has now gone up by 50 basis points to 5.2%. Your rate's now at 4.2%, which used to be 1.45. You still have the same fixed payment of $2,005, but now the interest portion actually increases above your payment. So the principal is actually negative 43. So when the mortgage starts to grow instead of gradually being paid down, we refer to that as negative amortization. So what mortgages will be affected first? So again, during the month of 2020 March, prime rate dropped 3 times in quick succession. So a lot of the mortgages that were arranged during that time will be affected. So it's those who started at the beginning of the pandemic here. So why do people choose a variable rate mortgage with a fixed payment? Well, a lot of the borrowers that we work with that want this option are borrowers exactly what it says here. They're concerned with their monthly payment and that how it affects their cash flow. So any mortgages offering a solution with the lowest monthly payment is very compelling, especially with the static payment being the way it is. Now, We could not have foreseen the prime rate going up so much during these last few months. However, it has. So let's take a look at this. When you want to take a look at the two different options that were available, the variable rate would have been 3.40%, or the fixed rate option would have been 5.39%. So obviously, anyone taking a mortgage is going to love the fact that they're paying less each month on that mortgage. So that sort of savings really hits home with a lot of our borrowers that we work with at our office, and it's a very very compelling option to say the least. So if you have a mortgage that you took out in March of 2022 and it's a fixed payment variable rate mortgage, you may see yourself hitting the trigger rate. And if that's the case, I would recommend you call and set up an appointment with your mortgage professional, whether that is a mortgage broker or bank, or if you want some third party advice, feel free to reach out to myself or my office, and we can get you started on some options that are available. Now, a lot of the options here, they are listed here. What happens when they hit their trigger rate is that you are either able to make a lump sum payment against the loan amount to catch up to make up that negative principal. You can also convert it to a fixed rate term, which in that case you'll be protected from any further triggers down the road. Or you can increase your monthly payment to keep the negative principal from happening and remaining with the original amortization period. So here we are. No one could have foreseen where we were at to be able to get to this point today. However, if you are in this situation and you feel like you are going to be affected or the bank is contacting you, I would recommend you reach back out to them and get started on some options so you're not caught in the middle of this as a surprise. And quite honestly, if you are taking a variable rate these days, it's probably better to take a variable rate where the uh, payments actually roll with the increases or decreases with prime rate. So you don't have to worry about the trigger rate. That also gives you some other benefits. There will be other benefits that are involved. So that would be if the prime rate does start to drop, then your payment will start to drop accordingly as well. If you were to take a fixed payment variable rate mortgage, if prime rate starts to drop, you would not see those savings in your cash flow. Essentially, you would see your amortization go further down and your loan would be paid off in a shorter amount of time instead of your payments going down. Anyway, that's where we're at today. If you have questions about this in detail, we can only cover so much in this video. Please reach out to myself, Joe Bladdock, in the link below to schedule an appointment, or like, comment, follow, share this video, give it, share with your friends so they can find out how trigger rates work and how fixed payment variable rate mortgages could be affected in the next coming months. Thank you for watching. My name is Joe Bladdock, and we look forward to helping you with your mortgage in the future. Have a great day.